If you guys have been hopping from RSI to MACD to moving averages in hope for better trades, you're not the problem, your indicator is. By the time you guys finish this particular video, I'm going to make sure that you know everything about your indicators and the best possible way to use them and the logic behind them. So let's get started. This video will be divided into 4 different sections. First, the problem with the most indicators. Second, why traders lose with indicators. Third, we will be talking about the indicators that actually work. And fourth, how to use all of these indicators properly. So without wasting much of your time, let's get started. Alright, so right on my screen, what you guys see is an RSI and EMA. So I'm sure these are some of the most basic indicators that probably everyone likes to use. So let me start with RSI first. Alright, so now this is a blank chart with an RSI. So generally what we like to see with RSI are overbought and oversold levels on the RSI, and based upon that we make a decision to buy and sell. I mean, that makes sense, but first let's understand the basic. All of these indicators that we generally use are all on the basis of maths, alright? All are mathematically driven. They are working on the basis of price, and however price reacts, you get to see the same reaction in your indicators as well. Now, the most simple rule with RSI is when you have an overbought zone, you want to sell, and when you have an oversold zone, you want to buy. I mean, it's pretty simple, right? But here in this scenario, let's try to just copy that rule in the most textbook style possible. All right. So here what we see is our RSI has just entered into that particular zone where we want to sell, right? But if we just match it with the candles, what we get to see is this was that particular candle where we entered into the zone where we wanted to sell. But where are we actually going to sell? Is it going to be this particular candle? Is it going to be this candle, this candle, this candle, or this candle? I mean, we have no clear direction. We have no clear idea where do we want to sell or where do we want to go short. And that is because we are only using this indicator as a filter to get into a buy or sell trade or to go long and short. I mean, it's that simple, but it actually isn't. So let's try to understand what are we missing here. The major thing that we are missing, I'm sure most of you guys would have already guessed it. If you did, make sure to drop that in the comment section as well. But when you are using any indicator, you are also supposed to use it with some of the most key levels. All right, you need to mark your levels of support and resistance, and then when you see such kind of reactions happening, only then get into a trade. Else, all of this reactions, all of this bearish and bullish divergence that you see on your chart is just noise and nothing else. All right, so that was the first important point about RSI, oversold and overbought zone. Let's move to the second part. Now, since we just understood something about RSI, let's try to understand something about indicators overall. I mean, most of the indicators, I'm sure you guys have heard, are lagging indicators, and I do believe in that because again, if an indicator works on the basis of price, it is going to be a lagging indicator until unless something works on the basis of volume. I mean, they are going to lag as well. And I'll give you a clear difference between indicators that work on the basis of prices, how do they perform, and compare it with the indicators that work on the basis of volume and how do they work. All right, so I'll make sure that by the time you guys end this video, you'll have a lot of clarity and you will know how to use any indicators with a lot of confidence and not just enter and exit on the basis of the noises that you see on your chart. So as I said, most of the indicators, they are lagging. So how are we supposed to use that? I mean, just in our scenario number 1, we saw that the market was getting into that overbought zone, right? I mean, it was pretty evident, but we had no clear area to get into a shorter. Anywhere where we would have went short, we would have obviously got stopped out. So what were we supposed to do here? First thing, as I said, we were supposed to wait for a very key level to get hit and then get into a trade. But as I was talking to you guys, let's talk more about indicators. All right, levels and strategy, will come to that later, but let's understand everything about indicators first. So as I was talking about RSI, now that was everything about RSI. Now let's also move to the moving averages, right? So here I have quickly turned on the moving averages and turned off the RSI. So what do we see here? We are currently on a 4-hour time frame. Now you can just make changes to your moving averages. You can make changes to the time frame. Let's go on a smaller time frame. Let's go on a 15 minute. All right, so we are currently on a 15-minute time frame. Our strategy says that we are supposed to buy every time we hit the moving average, and if we hit it from the below, we want to sell it. I mean, if we are doing something like this at our moving average, this is where we want to buy, and when we are doing something like this is where we want to sell. Pretty easy, right? I mean, the most simplest trading strategy. But what do we see here? Every time, let's say we came here, we would have bought, we just went lower. We came here, we would have sold here, and we just went higher. So how are we supposed to trade this? Now, the most easiest thing that you guys need to understand is when you use moving averages or any such kind of indicators, all right, which are working on the basis of prices, you do not trade it in a ranging market. So every time when you see a market like this which is stuck inside a range, you do not want to use any kind of moving average, no matter what time frame is. I mean, again, if you shift to a 1 minute time frame, this is obviously going to be a trending market. Something like that might be happening because of all these noises. All right, so you just want to stay away from all of these things. You do not want to use any indicators on such smaller time frames, because again, it will give you some kind of confirmation, it will give you some kind of bias, and you will get trapped inside the trade. All right, so again, I'll just repeat myself, never ever go to such smaller time frames to get confirmation from your indicators. All right, because I think that is just going to give you noise and nothing else. Now, if you would have just bought every time we touched this moving average, we would have obviously got stopped out. Every time we would have sold, we would have got stopped out. So it does not mean that this indicator does not work. I mean, I'll repeat myself, I know a few traders who uses moving averages, who do use RSI, who do use other kind of indicators. I mean, I personally like to use a lot of indicators as well, some which have been built by me, some which I have been using exactly what TradingView has to offer, and most of them, they give me a lot of confidence to trade. But I'll repeat myself, and this is the key rule of indicators. If you use an indicator which gives you a buy and sell signal, and if your trading strategy is based upon that, you are going to lose. All right, because no indicator is that accurate which can give you a direct buy or sell signal, and you'll keep on making money. All right, so it's very, very, very important that you use indicator in the way which I'm just going to tell you guys. All right, so let's move to the second section of this video, which is about why traders lose with indicators. So I was just telling you what the issue is with all of these indicators. Now, all of these indicators were the indicators which work on the basis of prices. Now, there is also an indicator which I like to use rather than using moving averages. Now, that is again my personal choice. You guys can be using moving average, but the indicator that I like to use is called as VWAP, and it looks something like this. All right, so this is what your VWAP looks like. There is a major changes. There is a major difference between moving averages and VWAP. VWAP stands for volume weighted average price. Now, I've made a dedicated video on VWAP on this particular channel itself. If you guys are interested, you can obviously check that video out. All right, so this is what VWAP looks like. I mean, it works on the basis of volume and not on the basis of price. And okay, what is the average of the previous 5 candle, 10 candles or 20 candle? That is not how it works. It works on the basis of volume, which is averaged out. So now you're looking at a price which is the true value as of now on the basis of whatever buying and selling has been happening in the market. But again, I'm not here to give you context about VWAP. I just gave you a brief idea about it. If you guys are interested, probably just check out that detailed video that I have created. All right, so now VWAP is one of those indicators which have certain logic behind them. Now, again, we were discussing why do most of the traders fail when they start to use indicators. First, they do not follow any specific strategy. Second, they like to randomly buy and sell just because their indicator gave them a trigger. Third, lack of discipline. Now, we have just understood why most of the traders fail with this. I'll give you some quick examples as well. So personally, as I said, I like to use VWAP. But it does not mean every time when we hit VWAP, I'll buy, and every time we tap again the VWAP, I'll sell. That is not how I use it. There are certain rules to be using any particular indicator. All right, so you have to understand the context of the indicator and then the context of the market as well. Now, the most basic rule about VWAP is you do not use it in a ranging market. You can only be using VWAP in a trending market. It can be an uptrend, it can be a downtrend, but it is very, very, very important that you use it in a trending market only. So when we just go back, when we just zoom out, you can easily spot that this is the area where Bitcoin was in a trending market. Now, if we just see this, all right, we came here, we got a fake out of the VWAP and we just pushed higher. Again, a fake out of the VWAP and we pushed higher. Now there is something which is very challenging and you guys need to study about that as well. The best kind of reaction to any kind of level, to any kind of indicator, is not that you just tap it and then the market starts to go higher. That is not how you do it, all right? So you do not just want a tap of your VWAP and the market has to reverse. Nope. Because that does not have enough fuel for the market to keep on pushing it higher. The best case scenario are something like this. You hit your VWAP, you get a fake out, you see a lot of sellers buying inside this area, and then you just keep on pushing higher. While you have trapped all the sellers at the bottom and now the price has started to push higher. So every time when you're using VWAP, I like to share this with the guys as well, and I talk about this on daily live streams as well, that you want to wait for the VWAP to get reclaimed and then you get into a buying order or a selling trade. All right, so that is how it goes. Now these are some of the reasons why most of the traders fail, because they lack a strategy, they lack the understanding of the market, and that's why they fail. Now you guys would be wondering, how do I know that a lot of traders are trapped at this bottom? And I'll tell you guys exactly how I know it. So I use a software, but also this is a feature on TradingView itself called as volume footprint. Now I've been using this for years and years now, and I'll tell you, this has brought a major difference in my trading. All right, so if I just quickly zoom in on the candles, you guys can see there are certain numbers. I have created a dedicated video on footprint as well. You guys can check it out. I have made an in-depth video about complete introduction to volume footprint. All right, so if you guys just quickly see here, we have almost 8 million shorts. We've got almost 4.46 million shorts. And let me tell you, these are not the only shorts. This is the delta, and delta is the difference between buyers and sellers. So there are a lot more sellers, not just 8 and 4 million. There are a lot more sellers, but then this is the difference between buyers and sellers. So you can just imagine the numbers of sellers that got trapped at the bottom. So this is one of the tools that I like to use in my trading as well. If you guys are interested in learning more about footprint and all about the advanced tools that I use, I have created a specific and a dedicated program about volume footprint. The link to that will be in the description. Make sure to join that and learn everything about advanced trading and about all these advanced tools as well. So now let's get back to the chart. And by the time I do that, guys, make sure that all of you hit that like button as well. All right, so this was our second chapter where I tried to explain it to you guys why most of the traders fail when they start using indicators, because they feel the issue is that they are using an indicator which does not work. But then the issue is that you are using it in the way how it is not supposed to be used. All right, so you need to understand about that as well. It's not just the problem with the indicator, it's probably your problem as well, that you are not understanding the indicator in the way you're supposed to understand it. So now let's move to the third chapter of this video, which is about what kind of indicators actually work in the market. All right, so let me tell you, there is going to be a different fit for everyone. Not the same indicator might work for everyone. To be honest, an indicator which looks like this on my screen is also going to be looking exactly the same on your screen as well. But probably this fits well for me and you might use something else, probably something like moving averages, something like RSI and whatnot. And again, every indicator is right if you can understand the context of the indicator and how it is supposed to be used. I'll tell you the most basic things that you guys need to follow no matter what kind of indicator you are using. So if we are being honest, the reason why we use indicator is because we want to buy and sell or long and short the market and make the money out of it, right? That is exactly what we want to do. So the goal is the same. The target that we want to achieve is the same, that we want to get into a trade which has an extremely higher probability of playing out, and for that we use these indicators. Now if you just go back probably 10 seconds and hear the line again that I said, you'll understand exactly how you're supposed to use indicators. Let me tell you, indicators are supposed to give you data. All right, I'm just explaining that particular line in the most possible way, in the most basic way. All right, so indicators are supposed to provide you data, a context of the market, that what is happening. Are the buyers taking charge? Are the sellers taking charge? What is the volume looking like? And more. All right, they are not supposed to give you a buy and sell signal. That is not what an indicator does. And again, I'll tell you, if there is an indicator which literally prints a buy or sell signal, it is going to get delayed. It might work out sometime, it might not work out sometime. You need to understand the logic behind that buy and sell that it is showing, understand the context, and probably then try to trade it. All right, so right now we are looking at this VWAP. I'm not going to use it. I'm not going to trade on the basis of VWAP because this is clearly a market which is ranging, which is grinding, which is choppy. And I'll make sure to stay away from this market. So this is how you save yourself, your capital, and your mindset as well. All right. So this is literally the first thing that you want to do. You want to understand your indicators and then just literally stick with it. So this was one of those indicators. Second, I also like to use an indicator called as TPO, time price opportunity. And this is what it actually looks like. And again, it might look something which is very noisy on the chart, which is very complicated, but trust me, it's not. All right. So now what you are seeing is a TPO chart, time price opportunity. So most of you guys have been following volume in the market, right? But this particular indicator that you guys see is an indicator which works on the basis of timing of the market. All right. So this helps you understand where the market makers are entering, where they are exiting, what are they buying, when are they buying, is there an imbalance on the basis of timing? Because trust me, there are certain levels this tool will give you, and they are going to be so bang on, so accurate that you will know, you will feel that, okay, these are the kind of indicator that I need to use, and not those lagging indicators which are literally stopping you from becoming a profitable trader. All right. So this is one of another tool that I use, and I use this on daily basis. So I was just giving an example about the indicators that I use and how do they help them. Now TPO also helps me with price action. It helps me understand if the market is making strong highs, strong lows. All right. And again, let me just give you an example. If you know that the current highs that Bitcoin has made, this high is extremely strong high. There are bigger players who have entered into a position there. So now you can be extremely confident in getting into a short trade, probably when we get a backtest of any particular level. Why? Because you know that there are bigger players who are going to defend this particular level. All right. So for you to get into a short trade when the market backtest, you will be extremely confident. All right. So you want to use indicators which gives you the context of the market, which helps you to understand about the price action, about the volume, about the prices, about the market makers movement. All right. And then you want to trade with them and not against them. All right. So this were few of the indicators that actually work. I mean, I use a few more. If you guys are interested, you can just join the live stream. I use them on the daily basis as well. All right. So this were few of the indicators that work. Now I need to add something to this. It's not important that you use exact same indicators that I use, but all of the indicators, they have certain customization option as well. So if you guys are using moving average, it has certain kind of customization option. Like you can set 9 moving average, 10 moving average, 15, 20, 49, whatever you guys like. All right. So always make sure that you are not lazy. You are making up your own indicator. You are customizing it because you need to make it fit according to how you look at the market and not what the indicator wants to show you. All right. You want to make it the best particular indicator out there on the basis of how you think, how you react, and how you trade the market. All right. So that was a quick advice from my end. Now we have understood almost everything about indicators. How do they work? How do you use them? And literally everything, right? Now coming to the most important part of this video, and that is how to use indicators properly. All right. So there are a particular rule that you guys need to follow. All right. And there are 3 basic rules that you guys need to follow when you are using indicators. And the first one is marking key levels. Second one is market structure in your favor. And third one is confirmations from your indicators and on the basis of price action. All right. So let me give you a quick example using RSI. So here I have created a dedicated indicator which is called as Bitcoin hit point. Now what does this do? It marks some of the most important levels for me. Now this is built by me. I have built it in a way as per my trading style. Now there are certain levels that I like to mark. So I have just automated them. Now just in one click, I can mark all the important levels that I like to mark. Here, what I could spot was that the price was making lower lows. And on the same time, the RSI was making higher lows. So this was a very important understanding and a very important confirmation for me as well. Now I do not like to use RSI, but again, since most of you guys do use it, I'm using that as an example. There are a lot of alternatives for RSI. I have built one oscillator for myself that is completely based upon my trading style. But then again, since most of you guys use this, I'm using it as an example. So here, all the things that I wanted to see in my favor are there. All right. I see that I have key levels, first box tick, Second, I see that the price action has taken out the previous liquidity. And third, I see the confirmation on the basis of my indicator as well. All right. So this is the way how you use indicator, no matter what kind of indicator you are using. All right. Any indicator that you use, or if you are looking for an indicator that just gives you a buy or sell signal, I'll tell you that the chances of it working out are extremely low, because if there was an indicator which could nail every buy and sell signal, probably everyone would have become an extremely great trader. They would have made a lot of money, but that's not the case. But if you can follow all of these things with discipline, with strategy, with a right mindset, I can assure you that you are going to make a lot of money. All right. So this was the most basic way how to use an indicator and how to understand it in the best possible way. So to sum up this video, I'll tell you guys that don't delete your indicators, just learn to make them work for you. Rewatch this whole video with your own charts open and you'll instantly see the difference. And also let me know in the comments which particular indicator you guys use for your trading. All right. And I'll see you guys in the next video. Bye.